talk us through that thesis, and if that thesis is, in fact, that Beijing will keep any sort of side effects limited, do you buy this dip?
Well, if we look at the past 3 years, we have seen sort of restructuring that the governmental regulators have been involved in, whether it's Iran, whether it's China Fortune Land, other single credit events. So they have the confidence in terms of this potential restructuring. So the likely scenario is that they will avoid bankruptcy when it comes to Evergrande, seek restructuring with strategic investors or bridge investors. The priority really from a domestic perspective and a sentiment perspective is priority on project completion, supply chain cash settlements. And so again, if we look at a lot of the focus that the government has, especially when it comes to common prosperity, ensuring this wealth gap doesn't get too out of control, then we have to also take a look at the focus on individuals in China and those who put down deposits with Evergrande outside the investment or equities and fixed assets or fixed income market scenario.
Catherine, why do you think global financial markets are finally waking up to this news?
When you look at what's happened in China year to date, whether it's the regulatory changes regarding some of the big tech companies, the private education companies, more recently the Macau gaming companies, and now this, and the focus that we have seen on property and deleveraging, as standalone issues, you can kind of assess them into your risk-reward view on China, but everything is kind of just all happening at once, which is causing sentiment to really weaken. And what investors are really looking for now is some kind of indication of what the government will do. Issues coupled with what we are seeing in the second half of this year in terms of the macro environment also slowing. So whether it's property investment slowing, whether it's deceleration consumption growth, you're probably going to see exports in China peaking as other countries resume manufacturing. So bottlenecks being removed because of COVID, or the flattening of the COVID. This doesn't bode well. So what we are actually looking for is an inflection point, and we're either reaching it right now or about to reach it, which will then see some kind of relaxation when it comes to monetary policy and the policy cycle turning.
Catherine, we've heard, and certainly it's not a majority in terms of the narrative here, in terms of, I guess, whether China is investable or not, but certainly a growing corner of the market, particularly outside China, have said that, because of what's happening right now and all the uncertainty, it's making this market, at least for now, uninvestable. We're going to play a sound bite, then we'll talk about it right after. Let's play that out, guys, please. Thank you.
There's been a lot of discussion about whether China's even investable. I'm in the camp that believes that it is. That it isn't. The rule of law isn't there. Contract law is not there. Private property rights are not there. So it's only gotten worse over the past year, as we've seen. Evergrande is just the latest negative for investing in China.
Yeah, Catherine, that was Ed Yardeni out of Yardeni Research. I guess my question is, I know you think China is obviously still investable. My question is, that part of the market that's now suddenly become social, if you will, for the common good, for common prosperity, do we need to use different metrics now to measure and give us signals whether to buy or sell a stock?
What's happened this year, David, is that once again, this policy intervention and policy direction has come to the forefront, but it's nothing new. We shouldn't be overly surprised because investing in China throughout the years, you have to take policy consideration or policy views into consideration when you look at corporate earnings. But as I mentioned earlier, it's just like so much is happening, targeting so many different sectors. So in terms of where to now, and a lot of clients are also asking us, should I just sit on the sidelines? A lot of the negative news is priced in, you could argue, but you do also have to be cautious. What we have seen, though, especially with the first half earnings season, is that sentiment has definitely been hit harder than corporate earnings themselves. So even when you look at, for example, like the innovation companies, their sales and earnings were growing at high 20s, low 30s versus, let's say, the broad index using MSCI or China of mid-teens. And this is using 2019 CAGR, so 2-year CAGR. So you're still seeing these companies deliver on earnings. You're still seeing a lot of push in terms of innovation, China climbing up the value chain, the focus on the domestic consumer, really importantly, the focus on the domestic investor. So yesterday, a lot of the weakness we did see on the Hong Kong market, you didn't have those southbound flows coming through to support the market. So, again, we shouldn't just be overly surprised at what's happened. We should be cautious, but you really do need to factor in that policy area when looking at your risk or reward.